Hey Trader, Steve here from Jackrabbit Trader. In this video, we're going to take a look at the markets and sectors for Saturday, October 26th, 2019. I hope you guys had a great week. Market was strong this week. It continued to move to the upside. Again, we've been in a green market cycle for some time now. So again, if you're not familiar with my terminology, head on over to jackrabbittrader.com/weekly process and you can check out the free trading e-course that goes through everything that we're going to discuss here. But for what we're looking at, market is again in a green market cycle, so we're over the 21-day exponential moving average. In those situations, we want to make sure we're putting risk on the table, not really hedging anything, and seeing how far this market can run, thinking that the momentum is to the upside. So with that, let's now take a look at the market from a technical perspective. And first, we'll start with the weekly. And you can see that we've talked about this broadening pattern for some time now, all right, where the highs are getting higher, the lows are getting lower, and you have this almost megaphone type pattern. In the same aspect, we've had this uptrend line that's been in play for some time. And you can see that we thought we maybe broke that uptrend line back here in August of this year, of 2019, but it quickly rallied back above, then failed, and now I think we're getting into this smaller pennant type pattern again, which is usually indicative of a move to the upside or a continuation of the current move. So since the move to the upside was previous, right, we had this uptrend. Now we're in this consolidation, this pennant, and usually, again, that indicates a consolidation with a resolution to the upside. But again, that's prediction, right? We're not really here to predict what the market's going to do. We're just trying to react to what it is doing. And in this case here, we're just ultimately in a larger consolidation and actually pushing up against this resistance level right here around 302. You can see that right here. And actually, let me make my screen a little bit brighter. Maybe a little easier. So there we go, right? So there's that 302 level. And, here on the weekly chart, I'm looking at some strong support, around this 293 area. So basically, if we got under 293, I think, we're in some bad shape here because we've gotten below it and rallied back above, gotten below it and rallied back above recently over the last 4 or 5 weeks. So 293 on the weekly chart is my line in the sand to the downside, 302 to the upside. And if we go into the daily chart and take it one step further, you can see that we are pulling back here. All right, we had this pullback. This is the 293 level, or those wicks below 293 that we saw on the weekly chart are right here in early October. But since then have just rallied and kind of grinding higher, and here we are sitting perfectly up against that 302 level. So I think it warrants some just be careful, some caution here on what's going on, because this market can very easily roll right back over. A couple bad earnings reports, maybe some news, roll right back over. But here on the weekly or on the daily chart, I'm really looking at this 294.30 level as the area, the level in the sand. So again, we take it from bigger picture, market cycle. What do we want to be doing? How are we staying in sync with the market? Well, we know we want to go and put risk on the table. Then we take it to a weekly chart and look at the broader, longer term patterns. And now here we are on the shorter term, more momentum driven pattern. And that to me is, this 302 or 294. Which one fails first? And then I think we need to adjust in either direction. But for right now, with members in my Jackrabbit Club, we are looking at adding risk, not really looking to hedge too much here, but that could all change this week, see what happens. But 302 is, again, the line in the sand to the upside and what we're actually pushing right up against. So with that said, let's take a look at some of the sectors. And if you're unfamiliar with my setup, this first column is the percent change over the last, I think it's week. Let me just double check that. So with that said, let's take a look at the sectors. And if you're unfamiliar with my setup, this first column is the percent change over the last week. And the second column is the percent change over the last month. And I like to do this so I can compare the sectors to the SPY. And in the first column here, you could see that the XLV, which is the healthcare, and the XLY, which is discretionary, both underperform the market. But then if we go to a monthly look, you can also see that XLP, XLI, XLB, XLY, and XLE all underperformed the market over the last month, and the market has changed, 0.17% versus 1.07% over the last week, or 7 days, I should say. So we just use that as a gauge, see what's kind of moving, and we'll take a look at. We'll just go through the sectors in order here, starting with the XLB. Okay, and realistically here, if we look at it from a weekly perspective, we're just in this larger consolidation, right? We're just here chilling out between 55 and 59, all right? Nothing really going on. We have an uptrend in play, and we also have a downtrend that you could say has been somewhat broken or is broken. So again, maybe this is more of a reversion back to the highs in materials, but realistically still trading in a range between 59 and 55. The energy sector has just been beaten up. We've talked about this. There was a few weeks ago where we had some trade potentials that we could put on in the Jackrabbit Club, and we looked at the sector. We were kind of between a few, and one of them was an energy versus, I forget what the other one was. But we looked at the sector and we said, well, why do we want to be the best house in the worst neighborhood, basically? So here, we use these sectors to kind of make decisions on where we want to put money, because our money's finite. We don't have a lot of extra to put into names that look good from the surface, but when you start to drill down a little bit, you want to make sure you're putting your money in the best names, and usually the sectors can really distinguish which ones you want to be trading in. So here, XLE still under this downtrend, even though it popped above it again this week, had a nice pop, but we're still in this downtrend / underperforming area. I'm not saying that XLE in my opinion right here, based on this pattern, could revert back, maybe break this downtrend, come back up to 63, but again, not really where I want to be putting my money right now. XLF, loving the look of this, honestly. Usually everybody says the market needs the financials to perform, and here we are with the financials on the verge of a breakout over 28.50. Let's see if the financials can make their way higher, maybe to 29.71 or even to 30.20. All right, but here is that small little consolidation and potential breakout over 28.50. So love the financials maybe coming to play here and maybe drive us a little bit higher. Same with the industrials, right? We had this pullback, all right, now reverting back up to the highs. You can see that there is a larger consolidation, but also a smaller consolidation here in play. And let's see what we got. Maybe we got like the 79 level and the 72. But again, on a shorter term perspective, uptrend is in play. So sectors starting to rotate higher. That's always a good sign for the market. Technology, same thing. We've talked about the importance of technology in the economy. All right, but realistically, that's the wrong one. Realistically, you have something in this area here with maybe a breakout to the upside. That level 78.80. There's some resistance again around the 82.60, but looks like actually technology on a weekly pattern is breaking to the upside. So that's something you want to note, right? When we go through trades and go through patterns, what is exactly the leading stocks that you want to be putting your money into? And we'll use that again in the Jackrabbit Club for reference. XLP has been on a tear, right? The staples, all right, solid move in the staples. Some of my names that I'm in with the staples have not performed, so I must have picked the wrong ones. But you could see here realistically just a consolidation between 60.30 and maybe 61.50, so within that dollar range. But upside, or trend I should say, is to the upside right there. Okay, so XLP looking good. XLU I usually stay away from, I'm not gonna lie. I don't know, it's something about the utility names. Obviously if you're in a high yielding portfolio, that's a great name, but you can see that realistically XLU broke out way back here in July and August, has run and really hasn't had much rest. So maybe now we're putting in a little bit of that rest between the 65 and 63 level, allowing some consolidation, allowing the moving averages and price to kind of catch up. You can consolidate through time, not just price. And here we are, maybe looking for another move to the upside. But XLU has been on a tear over the last 30 days, up 2%. So definitely outperforming the market that's only up 0.17. XLV, all right, healthcare names. We talked about the pennant pattern on the SPY, but here it is again on the XLV, and we have a downtrend line and an uptrend line. XLV realistically consolidating in this smaller range between 92.30 and like 88.50. Okay, so once it breaks one of those two, then maybe we'll have a stronger move. But coming out of this little pennant, that could also lead to a little bit of a stronger move as well. But right now XLV looks to be maybe just some dead money, just really consolidating, not doing much. And finally the XLY, the discretionary, right? We're doing this video in October. Holiday season is coming up. Usually the discretionary names will move higher. You could see that here, back here in December of 17. You could see that here in December, January of 18. All right, so normally these would move higher, but again, you have a little bit of that pennant pattern in play. If I draw it properly, okay, where you have the downtrend, an uptrend. So let's see how this resolves itself going forward. So again, if you were looking at the market and kind of taking it from the highest level to the lowest, here we are. This is what we just did. And the XLF breaking out, the XLI rotating higher, the XLK, the XLY consolidating towards its highs. I think these are all good signs for the market, but again, that's a prediction. We're not here to predict anything. We're just giving you the information, and we're trying to react to it. So just want to know where we want to put our money, be the best house in the best neighborhood type of idea. So that's it for this week. If you're watching this on YouTube and you enjoyed this video, make sure to subscribe, hit that like button, leave a comment, and again, check out all the other videos we're putting out and the weekly e-course over at the website jackrabbittrader.com. Other than that, have a great week, and we'll see you next week. Take care.